Hey, if you looked at your paycheck in 2013, and of course you have, you've probably been outraged that that number is smaller.
A lot smaller, right? And this isn't just hitting the wealthy. These increases are being seen by everyone.
Yeah, so coming up after the break, we're sitting down with our tax expert who explains exactly what we can all expect in the future, what we can do now to reduce the blow later. Time for Money Matters, and whether you are Republican, Democrat, it doesn't really matter. The fact is, more of our hard-earned dollars these days are going to the government.
And it's likely you have taken a hit. In fact, even pro golfer Phil Mickelson is feeling the pinch. This morning, we are talking about taxes with our Arizona money guy, Bob Hockensmith.
How you doing, guys?
Fine,
Good morning.
thank you.
Yeah, it was interesting what Phil had to say yesterday. I mean, he's kind of retracted what he said. I don't think so much about what he said, but because he used his form as a pro golfer to say something. But it's what a lot of people think, but just don't have the opportunity to say anything.
Well, sure. You know, like I said before, back in the 60s, the Beatles moved to America from England because the tax rate was so high in England. So it's not uncommon to hear that.
Well, who's really to blame for higher taxes?
Well, you have to understand that Congress is the entity that passes laws that either increase or decrease taxes, not the president. It's Congress that does that. So you actually need to write your congressperson, you know, the senator or legislator, because they actually read the letters that you send them, and they're the ones who pass the laws.
Well, let's try to get away from the politics of it and talk about what we can do, or really, let's start here. What are we going to be facing in 2013 that maybe we're not aware of?
Well, first and foremost, you got the payroll tax change. We all know about that. We see it every payday. But the big change is going to be the taxes that are going to be hitting us in 2014 for what we do in 2013. So a lot of people have no clue what's coming in the next 12 months. We're going to see capital gains taxes go up, income taxes are going to go up. We're going to see additional taxes for people who make good money, like $200,000 or $250,000 or more. You know, you get a successful person or family, $250,000 or more, they're going to pay additional Medicare tax, additional investment income tax. A lot more taxes coming around a year from now.
You say there are some things, though, we can do to ease that blow.
Absolutely. The best thing you can do, the number one thing you can do to reduce your taxes for the future and now, is put money into a retirement account. I don't care what kind of retirement account you use. IRAs, you know, 401ks, 403bs, deferred compensation, some form of a retirement account. Simple IRAs, even the Roth IRA is going to help you. If not today, then certainly in the future.
Should you really try to max out, or is that an individual thing?
Well, it usually is an individual thing. I always try to get my clients to max out depending on their circumstances, because sometimes people want to pay down debt more than they want to, you know, put money into retirement. But the retirement account contribution is the number one thing you can do to reduce your taxes for the future.
That's good advice. You also say plan ahead.
Yeah, you have to. I had a client, literally, I had a client call me up on the 27th of December. He says, Bob, I want to get married. Will it hurt me? And I said, you need to wait a week.
Oh, my God.
Yeah, and I had to explain it to his fiance because she wanted to get married.
I'm sure.
Yeah, but seriously, you don't want to do things at the last minute because you're going to get stung if you do, especially with the new laws as they are today.
What's going to happen with Obamacare this year? Are people going to see...
You're going to, it's not really this year it's going to happen, it's next year, because in January of 2014, employers are going to start paying either the penalty tax, or they're going to have to start contributing to the Obamacare plan, as they call it. A lot of employers are actually going to opt for paying the penalty. The penalty will actually be cheaper to many employers than actually covering health care insurance.
Oh, and you worry about the unemployment rate, right? I mean, you wonder how many business owners are going to have to cut their staff.
It's happening already. We already see it. I mean, you've got, you know, Intel's thinking about cutting back, you know, here in town. You've got other companies thinking about cutting back here in town. You're going to see some cutbacks. All we can hope for is that the amount of cutbacks they're going to incur are going to be less than the population growth. That's what we hope for. Because as the population grows, more jobs come up.
Well, this whole tax thing, it really gets people up in arms. And people, I don't think, mind paying their fair share. But when you have all this dissension in D.C. and just everything, people are so aggravated with what's going on. It just makes things so difficult. So,
people have to plan ahead.
Yeah, thank you so much for coming in. We could talk about this for days.
And we've been doing it during the breaks. It's been very interesting.
You'll see it again in May when the debt ceiling goes up again.
Okay, well, if you want more money advice from Bob, he has his information on our website. Just click on today's hotline, and we will help to get you in touch with him.